Hey guys, my name's Tim Kutsch. I'm just going to go over a quick training on Pivot Health Insurance and then some of the nuances, but we're going to keep this training really short so you're able to hop on the phones and get selling it right away. I'm going to share my screen here with you. And this is a normal screen of what this is going to look like for you. You can see I've created a dedicated domain, and if you're in production and producing this consistently, I'll buy you a domain. I've called it healthinsurancetomorrow.com. And when you go there, you get my link. If you are a brand new agent and need to do sales immediately, you can do it under this, and I can recode the sale to you once you're active in the system. Otherwise, as soon as you are active, you're going to have a screen just like this, but it's going to have your name, phone number, and email address that you want displayed on your website. You can also have it called timkutchhealthinsurance.com or whatever you feel is appropriate for your sales cycle. On this, there are some different products, and I can hop into that for a second, but I'd really quick like to just do the main part of this, which is STM, short-term medical. If you're unfamiliar, I do have a post regarding Obamacare versus Trump care, and that is helpful in some of the explanations on here. So the first thing that we're going to do is make sure people understand the differences between the two. And then we're going to hop right into quoting it because this is appropriate for a lot of folks. So you can notice it says save up to 50% on health plan coverage as compared to the Affordable Care Act on healthcare.gov. Now, this is not going to include any subsidies, so low income and no income folks might be better off with a subsidy or on Medicaid. But the middle class America and the high earners, self-employed people, this is going to be significantly better for them for a number of reasons. So real easily, you click the big orange button that says get quote. You'll fill it out. It's super duper simple. It's 681. I'm going to do my office zip code here real quick for you, and we can just run a quote. I'll run my date of birth. You're going to see how old I am here. You can real easily just do it on an individual like I'm doing here. Or if you want to add a spouse, you just click the plus spouse button. You enter their date of birth and gender. If you don't need to enter that, you can just click the X. Same with the child. If you need to add child 1, you can get their date of birth and gender. If you need to add a second child, you can do that. If you forgot the spouse initially, you can do that. And you can just get rid of those just as easily as clicking that X. So it's super duper user friendly, which is good to know. The coverage start date is automatically going to pop up the next available date. So usually tomorrow, which is why I named this particular site healthinsurancetomorrow.com. But you can also future date this. Now, important thing for you to know when you're talking to the consumer is immediately when they sign up, they're going to be charged. So whether they have a March 28th effective date or whether they have an April 1st or May 1st effective date, which you can do just by clicking here, they're going to be charged immediately, and then on whatever day of the month that you pick, that going forward. So if they picked April 1st as their start date, that's fine. They're going to be charged today. It'll cover April 1st through the following month, and then on April 27th or the next closest business day, if that ends up on a holiday or something, then it would be a month following. So know that that's kind of how the cycle goes. You're going to have a couple of questions here. You're almost always going to want to pick more than 180 days. It gives you those options though. So if you know someone in between careers or they started a new job but their coverage doesn't kick in for 60 days, you can do short-term plans. Most people that are buying this are buying it for the 1-year duration. So it'll give them up to 364 days of coverage. Now this is state specific. About 35 of the states, Nebraska, Texas, most of the places that this is popular in are going to allow for that 1-year coverage, that 364-day coverage. There are a handful of states that limit the duration though, like Iowa, and there's just a couple of terrible states out there. So you're almost always going to click the more than 180 days coverage. Now this is an important one. because most consumers, if they sign themselves up, they're going to click most affordable. They don't really understand. If you hover your mouse over it, it tells you though. So easy to manage is a 364-day plan. That's what most people want, and they want it because they want a 1-year deductible or a 364-day deductible co-insurance plan, yada, yada. The most affordable pairs for 90-day back-to-back plans, meaning it covers them for 360 days. But if they have significant events, health events throughout the year, they may be subject to 4 deductibles, 4 co-insurance, 4 max out-of-pocket, et cetera, et cetera. So while that is a couple of dollars cheaper, you almost always want the annual. So click easy to manage there and then save and continue. And a lot of this becomes second nature once you get good, and once you start doing lots and lots of enrollments, it's super easy. I almost always click on the core plan. It is available, like I said, in Nebraska and Texas and most of the good states out there. There are a handful of states that do not have the core plan. The core plan is simply a PPO, very similar to Aetna, United Healthcare, Blue Cross Blue Shield. It has the largest, PPOs are the largest network of doctors and hospitals, but it is still a network. So they're going to want to use in-network doctors if at all possible. Now, emergencies and that sort of stuff, you can use any doctor. It's going to be treated in-network. They're just going to try and get you to an in-network facility as long as it's not going to compromise your health within the next 48 hours. So that's kind of the goal on that stuff. But know that as long as they're trying and being reasonable, they're going to get the in-network coverage on that. So these core plans here, you can see, this is on myself. It's less than $90 on a monthly basis. I usually quote the most expensive, most comprehensive plan first. It comes with a low $1,000 deductible. It has the standard 80/20 for the co-insurance, and it features a $30 copay when you go see your doctor. It is a PPO, so it's the broadest range of doctors and hospitals. And it also allows you to have the ability to go outside that network if you need to. And it does cover drugs. Drugs are covered. Generics are $10 or less. And what I mean by that is if the drug is only $4, they'd only pay $4. If the drug is $50, they'd have a $10 copay. So that's what I mean by that. And that's it. That's as short as the script needs to be. And you can pitch it just based on that. I'm going to go a little bit further in detail because you guys are agents and you're going to understand this. But I want to run through a couple of things that I don't always say to all consumers because a lot of them get it already. And these are just definitions for you guys if you're newer to the health insurance game. So the deductible is the part that the consumer pays if services are performed. So you can click so if you go to the doctor and just for the sniffles or a cold or whatever it is, you're going to have a $30 copay. Copays happen before the deductible kicks in. A deductible kicks in when services are performed. So maybe you had a mole removed or a tiny outpatient type of a surgery. Those are going to be subject to the deductible and co-insurance. So just as a general definition, the deductible is the amount that the consumer is responsible for at 100% before the co-insurance kicks in. And that's on all plans, not just these plans. I'm just giving you general definitions here. After the deductible is met, that's when the co-insurance kicks in. And so once the consumer's paid $1,000 worth of services, they don't have to, they're not forced to, but if they have those medical bills, it would apply to the deductible. Then the co-insurance kicks in. So then the consumer is responsible for 20% of all bills after the $1,000 up until they've hit their maximum out of pocket. So as an example, maybe this person had $1,500 of bills. The first $1,000 is on them. The next $500 would go towards the co-insurance. They'd be responsible for 20% of the remaining $500, which would be $100. And then the insurance company would pick up the remaining $400. So in a $1,500 bill example, they'd be responsible for about $1,100 of that. On a worst case scenario, which is a good one to give consumers, especially the ones that have a little bit of fear or maybe have a 100-0 co-insurance after a $3,000 or a $5,000 deductible, I like to give worst case scenario. So your arm gets chopped off. It's a $70,000 reattachment. You get a heart attack, stroke, cancer. It's, $30,000 to $80,000 in hospital bills. You need a life flight with a helicopter. Those are some of the most expensive medical billing codes out there. That might be $150,000. In all of those case scenarios, you're going to meet the deductible and you're going to meet the max out of pocket. So again, in those scenarios, you pay the first $1,000, then you're on the hook for 20% up until you've paid the max out of pocket, which is an additional $1,000. So all in, the consumer's at $2,000. If they have that life flight and that $150,000 medical bill, super duper rare, but the insurance company is going to pick up the $148,000. You can see there is a lifetime coverage. It also kind of acts as an annual, because if you were to switch to another short-term medical next year, or stuff like that, it's basically effectively 1 year when you're doing that sort of stuff and shopping around and doing what's in the consumer's best interest. You're going to have this lifetime coverage. Almost nobody ever hits this. I would say anything over $250,000 of lifetime coverage, you're going to be more than set. This is an extremely generous plan with $750,000. There are plans with Pivot here that you're able to quote that go up to $1 million of coverage. Kind of unnecessary. The price goes a little bit higher, but if consumers are dead set on that, you can absolutely help them out with that. So that is the core plans. And again, they're the PPOs. They are less expensive because they are networked plans and they're kind of the most comprehensive and lower deductible. So that's what I normally quote first. And a lot of times consumers just say, yeah, that's better than my current plan. I'm going to go ahead and do that. So just for today's purpose, I'm going to click the Buy Now button on the most expensive plan. There is a one-time $24.95 enrollment fee, and these plans were repriced, and that enrollment fee changed just about a month ago. So just kind of make a note of that. I know it's a little bit in fine print there, but it does exist, so I want you to be aware of that and make sure the consumer's aware of that. Then you just simply click the Buy Now button. You can direct them to your website, especially if you have a domain as easy as go to healthinsurancetomorrow.com. And they can do this on their own, or you can walk through and help them out. You just click, it kind of reviews everything that you wanted: mail, 31, policy effective date, expiration date. That's that 364 days there. You can end these plans early. So say someone wants to end this, December 31st, they'd be able to get a January 1st effective date on the new plan. So you can stop the enrollment and start it earlier than this. This is just the maximum that they could keep it. It's going to go through 5 health questions. Question 1 of 5. Are they on Medicaid? Have they been denied health insurance, or they're an expectant parent over a 300-pound weight limit? Or been advised to do a surgery or treatment that's not yet completed. So if they tell you they have an upcoming back surgery, they're not going to be able to get this. Also, you can read these here real quick. Those are knockout questions, meaning if they've got one of those, they cannot apply for coverage. There's a question on AIDS, and then answer no if they are a U.S. citizen. So go ahead and click no to that. So you're answering no to all 5 of those. Those are, again, knockout questions. If they've got any of those, they cannot apply. They will get rejected. I'm just going to do this so you can see real quick how easy it is to type all this in. And again, you'll be working with a consumer you're familiar with. All right, so I have keyboard shortcuts, which is why it allows me to do that a little bit quicker. On my email addresses and my name. You can see here, so there's 2 screens. That was the general information page, and if there are spouses or if there are dependents, child, it'll ask for their name and that stuff on that previous page, but because we were just doing me, it didn't ask. It just asked about my name and not my dependent's name. On here, it's going to give you one more time, basically a rundown of this. It's going to ask, you get the option, the consumer gets the option of doing this on a card, so a credit debit card, and it accepts Visa, MasterCard, and Discover, or they can do their bank account. I typically prefer bank account because their card could get lost or stolen, or it could expire in a month or 2. So for longevity and persistency, I try and get everybody's bank account. If they don't, no problem. We're still going to take their money. Their plan's still going to be active. You'll just want to keep up on making sure that it still stays active going forward after that. So go ahead and click that. You'll type in, the card number, the security code. You'll put in the expiration date. You'll check here if their card has a different address on file than the address that you just typed in at the beginning. Most people are going to have the same, so you don't need to check it. So you just move on. You'll go through the terms and conditions. You can, again, direct them to this website. Also, they're going to get an email with all this information, so they're going to get it. So you don't have to read every single word there. You'll agree to purchase a 364-day plan. Again, this is not a commitment. You can end this plan at any time, but that's the maximum, and then you would need to renew it or get a different plan. And then for the signature, it's just an e-signature. You just type in the name that you did at the very beginning of this. I can't even spell my own name. I apologize. And then the signature date. And then you click submit to start coverage. This is a live website. I'm not going to click that button. It would try and process that fake card that I just typed in 1234. And so this is it. It'll say congratulations. After this, you're able to immediately go into your agent portal, pull up their brand new ID card, print it out for them, and hand it to them if you're in person with them. If you're not, you can immediately email it to them. So if you're on the phone, okay, congratulations, sir. I'm going to email you in the next 5 minutes. You're going to get your new health insurance card and your login information from the insurance carrier and be able to see all of this as well that we've gone over here today. In about 2 to 4 weeks, which is the processing time on this, you're going to get a big packet in the mail that goes over everything. You're also going to get the laminated cards if you like laminated cards to put in your wallet. But you'll get everything from me here in 5 minutes. And that's it. That's the end of it. Couple of things I want to go back to real briefly. So there are some different options as far as short-term medical plans that people can pick. There are 40 different plans. I almost always use the core plan. Some people are dead set on having a higher deductible and taking on higher amounts of risk. That's fine. You can sell those plans to them. It's whatever the consumer wants. However, you just want to make sure that they understand what they're getting on these. You can see the lifetime coverage on some of these is $250,000. There are a couple of different plan types here, and this is what I want to go over with you because these are the things that matter. So the core plans are the PPO plans that we took a look at a minute ago. They're also going to be the most comprehensive. So that $30 copay when they go see a doctor, that will apply, and it is a network plan. The choice, the deluxe, and the standard are going to be open networks that all include that $30 copay. What I mean by open network is they can actually use any doctor and any hospital that they want to. But because of that, the premium is a little bit higher than the PPOs. So that's kind of the catch-all. Now, they do have higher deductibles, higher max out-of-pockets to combat that and actually have lower premiums. But that's kind of the trade-off there. So know that. The economy plans do not have a $30 copay when people go see their doctor. They're going to be billed the full amount. So if you're looking at those economy plans and saying, oh, those prices are terrific, that's why when you click the details, it's going to be subject to the deductible and the co-insurance when they go see the doctor. So if the doctor charges $150 and normally they'd have a $30 copay, here they'd pay the $150. It'd count towards their deductible. However, most people, that's not what they want. So know that when you're quoting these different plans that the core is usually what you want. The next best, it'd be choice and then kind of deluxe and standard. And then my least favorite is economy, but they do have those options. Now, some people say, Tim, $80 a month is fine for my health insurance, but if something were to happen to me, I don't have $2,000 in the bank account, or if they chose a higher deductible, $5,000 in the bank account to be able to pay off those deductibles, what do I do? And you say, no problem, Mr. and Mrs. Client, I've got a solution for you. And going back to the very first page, healthinsurancetomorrow.com or whatever website you'd like. And again, you'll get a website that's created for you. It's free of charge. If you want the domain, though, that costs a little bit, or if you're doing production with me, I'll buy it for you. You go back into the products, and I'm just going to mention them briefly. There is zero deductible plans. You're not going to want to use those. Those are not exactly what you're thinking. They're not quite as high quality as what we were talking about before. There's also Bridge to Medicare, which is simply 3 back-to-back 364-day plans for 62-year-olds all the way up until they turn 65, which is terrific because it does a couple of things. Keeps the rates steady and allows them to continue coverage even if they have a major health event like cancer or heart attack from the age of 62 all the way to age 65, and then they're on Medicare and they automatically get Medicare at age 65. So that is a really cool one, priced a little bit higher and only available in some states, not available in Nebraska. So know that. But I do want to show you the supplemental side because this is a big add-on and it's super duper easy. So I'm just going to show you as we were looking at that, you know, 1,000 deductible, 1,000 max out of pocket. You know, this would cover you for $29.95 on a monthly basis, and there's no enrollment fee on this. On the short-term medical, there was that $24.95 enrollment. On this, there's no enrollment fee. So it's $29.95 for an individual or $59.95. Sorry, they should make it 30 or 60 just so I can say it easier. Anyway, for an entire family, which is terrific, especially those families that have multiple kids. Anything could happen to any one of them. What this is if you're in a type of an accident or if you're sick with a major critical illness. So heart attack, stroke, cancer, major organ transplant, etc. The stuff that you would really need to fulfill the deductible and max out of pocket for in those plans, it's going to give you $2,500. Also comes with some extra benefits, but those are the main things. So if you're in some type of accident and you need to fulfill your $2,000 worth of deductible and MOOP, this is going to kick in up to $2,500, which is terrific. And then also, it's got some extra or accident or some type of major illness like cancer or heart attack. And I just had a friend my age go through some of that stuff, just a brain tumor, that sort of stuff. That would have been included in this major life-threatening type of a stuff. And that would have paid out and paid everything for her. So that's one of those things that I want you to be aware of. It's easy to tack on because a lot of people can say, you know, I could pay 110 instead of $80, and anything that happens to me throughout the year that's major, I'm not going to have to worry about. So that's a big peace of mind. It can double if you're willing to go from 30 to $50. I'm just going to round because it's ridiculous for me to try and say that. And then also family goes from basically $60 to $100, and now we're covering 5,000. So if people have picked higher deductibles or they want those higher limits, that's available. These do include telemedicine. So you've seen people pitch the doctor over the cell phone type stuff. This is included. It says unlimited video phone doctor consultations, discounts on prescription drugs, even though the short-term medical has that as well. And then this is going to include vision savings. So contacts, exact glass, I can't even say it, contacts, glasses, or exams. I apologize. And so that's kind of the difference here. They do have some extra benefits, $5,000 in accidental death benefits. Not a big selling point, but it is a value add on there. And then $250 per day for up to 10 days of hospital benefits, or $500. Basically, this is just showing you that if they go to the hospital, they're also going to get that money. So if they're in there for 10 days, they're going to get $2,500. Maybe their deductible and MOOP, the max out of pocket, cost them $2,000 in that total time. So they're actually coming out a little bit ahead if they were to go into the hospital. Now, most hospitals charge $250 to $300 on a daily basis. So even if they were only in there 3 days or 4 days, this part of it is going to cover the majority of that. So that's very easy, nice feature. So I think that's all I'm going to go through here today. There are some other nuances if you want to learn a little bit more, but that should get you selling. Again, I keep the initial conversation that I have with clients pretty short and sweet, and then I send them the details and the screenshot of the quote that we were talking about, and then I just follow up in a day or two and make sure that they receive the letter, kind of letting them off the hook. to make it not a sales call unless they say, yep, I've seen it, looks good. Then we can just roll. And it really does take 5 minutes or less to enroll them. And then, you tell them in the next 5 minutes, I'm just going to get you the email with your new health insurance ID cards. Super easy to sell this. Good luck. If you need help, go ahead and give me a ring. You should have my contact information. You can always email me at tim@totalinsurancmarketing.com or my office phone 402-999-4260. Thanks so much. See you soon.